June 13th, 2024. One of my main thoughts coming into today was we might have to trade below the prior day's low. And the reason for that was daily chart. The daily chart had a gap up, big gap up yesterday, and then a bear bar, not quite closing near its low, but a reasonable enough reversal bar that it could be considered some sort of island top, and we might get a couple legs sideways to down. So I thought traders might want to see what was below the prior day's low and if we were going to trade below it and get a sell-off down to the June 11th high. Obviously, we ended up finding buyers below that low, which isn't all that surprising considering it was more of a doji bar than a big bear bar. And this is, it was a relatively tight channel, but it is three pushes up at this point. You can see 1, 2, 3. So it's some sort of wedge. So I think there are probably sellers above the June 12th high. And the June 13th high, June 13th today, it's a high one buy, but it's really not all that good. It's a bear bar. And, there's probably sellers above this high anyways. Maybe we get a vacuum test of 5,500, but I'm really not all that sure. This gap as well is going to close. This is not going to be a measuring gap and, continuous rally. Very, very, very likely that this gap is going to close and we're going to get back to that June 11th high at some point. Today we had a midday reversal, and whenever you get a reversal around bar 42, and the whole day, this is a really important point. The whole day was pretty much setting up for a reversal, and the way you can know that is by just look at the bull bars, right? So we keep going down, but you get a good-looking bull bar, a credible buy on 12, a good-looking bull bar 14, a good-looking bull bar 20, and then 3 straight bull bars, all relatively decent and closing near their highs. Another good bull bar 27. So these are not things that happen. This range in particular, from bar 12 to 27, pretty much gave it away that we were probably most likely going to get some sort of midday reversal and not going to get some sort of strong bear trend day. So whenever you're getting some, the market's moving down, it's making its way down, but it's not all that tight of a channel. You can see it was a bit of a broader channel today. It's making its way down, but you keep getting these really solid bull bars, again, 12, 14, 20. And the spike up, it really dramatically increases the chances that you're going to get some sort of midday reversal. And oftentimes when you do get the midday reversal, it will end up trading above the high of the day like we did today. But usually when the market trades down for the beginning portion of the day like we did, it'll have a tough time getting far above the high of the prior day. Or the high of the day. So even though, there's a reasonable enough chance we went above bar 1 after bar 37, it wasn't very likely we were going to go far above bar 1. But again, usually midday reversals come around bar 41, 42, but occasionally they're a little bit earlier. And when you get a huge bull bar closing near its high, pretty obvious on 37, that's probably where the buy is. It doesn't make all that much sense to just wait and see if we get a pullback, because realistically, this is the best looking buy setup. And if bulls don't take this one, they're probably not going to take another reversal from over here. Bar 1. A bear bar closing near its low. It's good for the bears. But if you look, we're opening pretty much in the middle of yesterday's trading range. All right, closes pretty near the middle of yesterday's trading range. So not really as good as it could be. It's also an expanding triangle, right? Which is really just a type of trading range. It still was an expanding triangle, I suppose, but an expanding triangle is really just a type of trading range. Essentially, an outside bar on a smaller time frame, or on a larger time frame. So this expanding triangle here is like the equivalent essentially of bar 14, how it's an expand, and the outside bar is just an expanding triangle on a lower time frame. And outside patterns are the same thing. But moral of the story, bar 1, a big bear bar closing near its low, but we're in the middle of yesterday's trading range and we're in a breakout mode pattern. So overall, probably better to wait. Bad follow through on bar 2. Bar 2 is a high 1 for the bulls. It's really not all that strong. There's probably sellers above and probably sellers above 1 as well. I thought, I was surprised we didn't get back to this low right here and we kept this gap open. We might have to did we get back to it? We got within 1 tick. The low 54.46, the high 54. So that's probably the magnet this was trying to test right here. 78, not necessarily the high of the day. We got a little bit above that. It was probably trying to test this low. We got within 1 tick of it, which is close enough for most traders to consider it tested. So I take that back. If the market gets within 1 tick of it, it's considered tested. So We did actually test this low late in the day. And why did we test that low? Because it's a trading range day. And on trading range days, magnets where bulls buy below and they scale in lower, they're probably going to have a chance to get out. Bar three, a bear bar closing somewhat near its low, but not really all that great. It's an inside bar and it's a double top with bar one. So it's a potential sell for a high of the day, but it's really not all that good. I'd probably rather wait and see what you get. If you're taking a trade like that, you're trying to make a lot of money. Because it's a low probability trade. You're not selling below three for a scalp. I think it's a lot more of a swing trade. But double top one, neckline too low, and follow through for the bears on bar four, but it's not very good. Bar four not closing below the neckline of bar one and three, which is the bar two low. So bar four not closing below the bar two low is disappointing for the bears. They wanted to see a better bar. It also doesn't close below its midpoint, so that's also disappointing. Probably sellers not too far above bar four. It's essentially a high one because we have the gap up and then the pullback, bar one through three. We did not trade above bar two, so that is why bar four would be considered a high one. You could probably call it a high two if you wanted to, some sort of second reversal up, because bar two was a reversal up. It just didn't trigger. So it's not unreasonable to call bar four a high two, but either way, it's not a very good buy. There's probably more sellers above bar four than there are buyers. You can see traders were more interested in buying near the moving average during bar four, and they're probably going to scalp out around the high. And that's exactly what happened. Bar five, sellers above bar four, probably not going too much lower. This breakout has a lot of overlap, so it's really not as good as it could be for the bears. It's still reasonably possible we have to test below yesterday's low because of the daily chart reasons that I mentioned, but overall, this isn't all that strong for either side. Six, a bear bar. It closes below the moving average, and I think it closed around its midpoint. I'm not quite sure if it was above or below, but around its midpoint. But it's still not really all that great for the bears. They probably need at least one more bar for the bears to get. Or we're probably always in short, but they probably need at least one more bar to get some sort of credible sell. You really want to see for the bears is consecutive bear bars closing near their lows, breaking out far below the bottom of this range, and you want to see a breakout below yesterday's low. I think yesterday's low is the target, and we might be trying to reach that right now. But we're moving there in such a way that it's kind of difficult to trade. Bar seven, a bear bar closing near its low, good for the bears, but look how much overlap there is with bars 4 and 5, and then bars 6 and 7. There's so much overlap over the past couple of bars that it's hard to be looking at this as a strong sell to close sell-off. So while it's reasonable to sell the close of bar 7, it's probably not all that ideal because because of the amount of overlap that there has been. And you're selling probably in the middle of a trading range. So it's really not all that good because of yesterday's trading range. And then you can see a lot of traders use 7 for profit taking instead of selling more. That's why we got the bounce on 8. If 8 had been a bear bar closing near its low, we would have been clearly always in short and going lower. So that is probably why it did not happen. Because on trading range days, the market never does exactly what you wanted it to do. It always does something a little bit differently. So traders wanted to sell below 7 and get a big bear bar closing near its low 8, but instead they were never even triggered, so they get a disappointment bar. However, 8, not really all that good. Some traders would argue second reversal up, but it's really not all that strong, a big tail on the top. If we do trade above it, probably sellers not too far above. And you can see, instead, we got a big bear bar closing near its low, bar 9. I think bar 9 is a really tough sell. I'm selling right at yesterday's close. It's true that we're probably going to the prior day's low, so that's good for the bears. But 3 pushes down, 1, 6, 9. Pretty obvious 3 pushes down, and 9 looks like the most climactic bar out of all of them. So I would be pretty hesitant to look to sell bar 9. You might instead wait for follow through. A lot of times bar 10 will look like bar 12, and that would be a credible buy setup. But instead, you get a bear bar closing near its low on bar 10. It's not a very big bear bar, but it is follow through. And the bulls had a real chance to create some sort of bull bar and establish a possible low of the day and a possible low of the potential trading range. And instead, we get a bear bar. So I think that was really important. And a lot of the bulls who were front running bar 10, hoping they were going to get some sort of strong bull bar, are disappointed with how 10 closed. So they'll exit their longs, and we get a big bear bar closing near its low, bar 11. Can you sell bar 11? You can, but there are issues with it. There's a lot of glaring issues with bar 11, I think. We may as well start with the positives. And obviously, the positives are you have 3 straight bear bars, 9, 10, 11. We're always in short. and it's sell the close. So those are the clear positives, right? Always in short, sell the close, bear bar closing near its low. Hard to go wrong with that, except for the fact that if you're selling here, you're selling really close to the prior day's low. And yesterday's low is going to be some sort of support. Generally, whenever you trigger a signal on the daily chart, the market pulls back and then it re-triggers the signal again. So you can see we triggered the signal on bar 19, and then we pulled back before triggering the signal yet again, and then it turning into a trap. Also, your risk reward is really not all that good. If you're selling below bar 11, you probably have to have a stop up here. What are the odds we're going all the way down here before we go up here? I'm not so sure. It might end up being a more sideways bar. So on bar 12. So if you're selling below 11, you're looking for bar 12 to look something like bar 9. You're looking for a collapse and essentially a breakout below this channel, and probably, wanting to make a quick painless 10 points. There is, because of the daily chart, you might think that possibly we're going to try and close this gap if the bears can get a bear surprise. So it's probably not the worst swing trade, but the thing is, if you're selling below 11, your risk is big because you're risking 9, 10, and 11. So with big risk and your probability is not quite what you want it to be, I think it makes it a more difficult trade, and so less traders will take it. And that's why you get disappointing follow through on 12. 12, I think, is a credible buy. It's a wedge, 1, 6, 12, or you could say 3, 6, 12. Either one is probably fine. But either way, it's clear 3 pushes down and a pretty obvious sell climax. So it's okay to buy above 12. And you know that when you get a parabolic wedge on the open, parabolic wedges in general are minor reversals. But in here, when you're getting a parabolic wedge on the open, you know that you're probably going to get 2 legs sideways to up. But you also know that the market's probably going to go a little bit sideways because of how strong or how tight the channel down from 1 to 11 is. You know that parabolic wedges in general are probably going to go a little more sideways. And that's a good rule of thumb in general for sell climax. Even over here, it wasn't. It was kind of a parabolic wedge, 1, 2, 3, but I looked at it as more of a second leg trap and a sell climax. But this channel was so tight that if you're buying above 37, you know we're not just going to rally straight up. You know it's going to be more of a sideways to up bull channel sort of thing. So same sort of deal with 12. You can buy above 12 for sure for a possible low of the day, but you know that big problem, we're probably going to go below yesterday's low at some point today because we probably have to trigger that sell signal. And B, the channel down was pretty tight, so you know it's going to be more sideways to up at first. So bar 13, disappointing, but relatively expected. If you bought above 12, you knew we were probably going to go more sideways first. Outside up on 14, a good bull bar, closing relatively near its high. Are we going higher? We might be, but I'm not sure how much higher. The thing that I thought was important to note is that we had this open gap with 7 low and the 10 high, and it's still open. And does this look like a bear trend day? Especially after 12 and 14, I would say this does not look like a bear trend day. This looks like a leg in a trading range. And if it is a leg in a trading range, then we're probably going to get back to the 7 low at some point today, because the bulls who bought the 7 low were disappointed, and they should be able to, or basically the bulls who were fading the breakout were disappointed, and they should be able to get out at some point later today. So reasonable to buy above 12, disappointment 13, and then a big bull outside up bar 14, closing near its high. Even if we trade above 14, we're probably not going straight up again because the channel down was so tight. But keep in mind, if you bought above 12, what was your bare minimum premise was that we're going to get a second leg sideways to up, and we now have that on 14. So it's still definitely okay to stay long for a possible low of the day, but we do have that second leg sideways to up on 14. 15. Excuse me. 15 is a really disappointing bar. I think bulls wanted a slightly better close. I thought it was okay if you get some sort of weak bear bar. Ideally, you get a huge bull bar, but it probably wasn't going to happen with how tight down the channel was. But I was, thinking that we might get some sort of weaker bull bar or weaker bear bar, which is fine. But instead, you get a bear bar closing somewhat near its low, which I think is disappointing for the bulls. They wanted to see a little bit of a better bar, but instead they got 15. 16, a bull doji, but really not all that good. I think that once you see 16, if you're still long, if we're going to go up, we're going to go now. We've gone sideways for long enough. And if we're going to start to rally, we're at least going to get some sort of start to the rally pretty much right now. And instead, you get a disappointing bar on bar 17. So bar 17, an inside bear doji bar. Do you sell below 17? I probably wouldn't. The bear argument is that this is a three-legged pullback. So 12, 14, 16 after the spike down 9, 10, 11. And then we have a three-push pullback, and the bear trend is resuming to the downside on 17. But it's not really a very good sell signal bar. However, I think it was disappointing for the bulls. I think the bulls wanted to see a better bar on 17. Instead, they got something disappointing. So a lot of them use the small rally on 18 to just sell out of their longs, and that causes 18 to close near its low. Again, now that 18 is close near its low, it could be a three-push pullback, and we might be starting some sort of bear trend, especially with the open gap from the 7 low to the 10 high. But I'm not really all that convinced. And my main reasoning is that bar 12 is really strong and bar 14 is really strong. So those bars should not be as strong as they are if this is going to be a big bear trend. We're also towards the bottom of yesterday's trading range. So I'm really more thinking we might end up getting a vacuum test of yesterday's low. However, 18 is a bear bar closing near its low, and we are always in short. So it's probably not unreasonable to sell the close. Follow through at 19, back to clearly always in short, consecutive bear bars closing near their lows. Obviously, the problem, we had all sorts of wedges today. We had a wedge in the open. We had this wedge, channel wedge. But I forget where I was going with this. 19, whatever. I'll just go back to where it was. 19, a bear bar closing near its low. Consecutive bear bars, always in short. But again, 12 and 14 are really strong. And we've now triggered below yesterday's low. It's good for the bears that 19 closed below yesterday's low. It makes you think that the first reversal up is probably going to be minor. And one other point about 12. If you're buying above 12, I thought that it was okay to have a stop and measure move down in case we immediately dipped below 12 and reversed up. But I probably would not have still had that stop come bar 18. I think it's better to just get out directly below 12 at that point. I was kind of surprised we got such a big rally up on 20. I thought that we might end up going a little bit lower, but I generally think, if you're going to take a bar or take a buy signal like 12 and put a stop and measure move down, it probably should trigger below 12 within a handful of bars and then reverse up pretty abruptly. But instead, we held above the 12 low. Once I saw 16, I thought pretty okay to move your stop to right below 12 because we shouldn't trigger below there. If your premise of this is the low of the day and we're going to end up getting a rally here is valid. But 19 consecutive bear bars closing near their lows. But then we never even trigger 19 and we get a disappointing bar on 20. 20 is also disappointing for the bulls because it doesn't close on its high. And I think one of the big reasons 20 does not close on its high is because 18 and 19 were so strong. So those bars were so strong for the bears that there were less bulls willing to take the buy because they thought that, well, A, if we were going to rally, we probably would have done it already. And you're buying against 3 consecutive bear bars, 2 of them closing on or near their lows. So it's really not as good of a buy above 20 as it could be. 21, a bear bar closing near its low. Am I selling 21? Probably not. It's, some traders would argue it's a swing trade, which isn't unreasonable because you're selling at the moving average, which is good for the bears. If you're selling in a bear channel or a bear trend, bear channel is a bear trend, but it's also a bull flag. But if you're selling in a bear channel, you want to be selling closer to the top of the channel line and the moving average, which is what you're doing if you're selling 21. Again, my problem is how strong the bull bars have been today. I think the reversal down will be relatively short-lived. 22, follow through for the bears, but really not all that great. It's for the bulls, maybe some sort of, lower low major trend reversal, or you could argue, wedge 1, 2, 3, and a failed breakout below the wedge. Now we have a higher low. Either way, I think, you're looking for a bull bar and you get a good bull bar closing near its high, 23. It's reasonable to buy the close. You're looking to get, I think, to the 7 low is the first target and see from there. Follow through 24, consecutive bull bars closing near their highs. 24 closing basically on its high. I think credible to buy 23, 24. You're buying closes. Does this mean we're going to rally straight up? No, probably not. We're probably going to go a little more sideways to up, but it's reasonable to think we can at least get to the bar 10 high, which spike 9 and then channel 10 through 19. So a spike in channel trend, or potentially even close the gap with the 7 low, which is where I thought we were going. Follow through for the bulls on 26. Good for the bulls. We're probably going at least a little bit higher after 3 consecutive bull bars. It's going to be good enough for at least a small second leg sideways to up. 26, a bear bar, disappointing, but somewhat expected to get a disappointing bar after uh, 3 straight bull bars towards the top of the channel. Again, the 10 high. And then 27, a bull bar closing somewhat near its high. Again, I think we're going a little bit higher, but I'm not sure how much higher. I think the best case scenario for the bulls, for at least the time being, is we reach the sell climax high, which is the bar 9 high, and then probably start to go sideways. But instead, we never trigger above 27, and we get a disappointing follow-through bar on 28, a bear bar, but a huge tail on the bottom. Probably buyers not too far below. Maybe, some traders would argue 1, pullback 2, pullback 3, or 1, 2, 3 of some kind. So maybe some sort of wedge, which would be really pretty disappointing if we start to sell off. But I think, probably a minor reversal down if we do get it. 29, a bear bar, still a tail on the bottom. I don't think you have to get out below 28. And I don't think you have to get out below 29. But the thing is, if you stay long between 28 and 29, you need 30 to be a good looking bull bar. You need 30 to look like 24 or 23 or 24 or 25, something like that. Because the bulls are starting to lose faith in their argument after 28 and 29. They're thinking, why haven't we vacuumed up to this obvious magnet yet? So you need a pretty good bull reversal bar here. And instead you get a bear bar closing near its low, closing below the moving average. 30 makes a lot of the bulls confused because they thought that we were going to at least get to this magnet. Now they see 3 straight bear bars and they're thinking, uh-oh, even if we get a reversal up, it's going to be minor because we now have 3 straight bear bars against my bull trend, which is not what you want. You don't really ever want to sit through a 3-bar pullback. You usually only want a 1 or a 2-bar pullback in a healthy trend. That is a 1 or a 2-bar pullback per leg. You can see on this whole rally from 37, 1 bar, 1 bar, 1 bar. We got a couple legs sideways here, but never 3 bear bars in a row. 1 bar, 1 bar, 1 bar, 1 bar. And then we had 3 bear closes in a row anyways, and the trend was over. We were now going more sideways. So because we had those 3 bear closes in a row, 71, 72, 73, that's probably part of what alerted traders who bought above 74 to scalp at the high of the day or the low of this bar after we traded up. So bulls see bar 30 and they decide they're going to exit their longs rather than staying in because they're pretty disappointed with how their trade has gone. So they exit their longs and that's what causes 31. Bears can sell 30. It's a bit aggressive because of how tight the channel up was, but it's definitely still reasonable. I think if you sell 30 and you get, a quick 6 or 7 points, you probably just take it and get out of the trade. There's buyers probably here, and there's probably buyers not too far below here if we get there. Because again, this is a strong rally, and we have all sorts of strong rallies today. So although we have the open gap, which is important, I think that is better to use as a profit target for a later reversal up. So the 6 low, or the 7 low is right here. And I think that's going to be an important price later. You can see when we got there, we initially sold off. So 31, a big bear bar, but a tail. 32, an inside bar, a low one short for the bears. Not really all that great, looking like the bottom of a trading range. And an inside bar, 33. So it's a triangle, but with it being an II, it's a final flag for the bears. So even if we get a reversal below 33, which, so whenever you get a final flag, 60% chance that you're going to break out below it and get, maybe one more leg, you probably will. And then but very likely after that, you're going to get a reversal back up into that area. So even though we get the breakout 34 below 33, the bulls who bought below 33 are probably going to be able to scale in and make money. You can see they weren't quite able to on bar 35, but they continued to scale in 35, 36, and they were eventually able to. 36, so 35 consecutive bear bars. It's potentially becoming a second leg trap, but it's probably okay to be short. 36, more follow through for the bears, but again, I thought that, it's still a bear bar closing near its low, and we are still always in short, and all of that is true. But again, we have, a lot of good-looking bull bars today, and I would be really surprised if the market just completely ignored all of the good-looking bull bars and just went down all day. And then you get the reversal 37. Huge bull bar closing near its high. Reasonable to just, it's more of a Walmart trade where you just buy and you put a stop below 37. If we trade below 37, your premise is invalid. If you're buying above 37, your premise is it's the low of the day. And this is the midday reversal you've been waiting for. So I think you buy above 37, betting wedge, 1, 2, 3, midday reversal, trapped bears, and we might get back up to the high of the day. So you buy, you put a stop below 37, you put a limit order up here, and you just wait. Follow through for the bulls on 38. Again, this is a pretty tight channel down, so you know it might need a second leg sideways to down. And a lot of times when you get the second leg sideways to down, it tests either a 50% correction of the big buy signal bar that we got on 37, or it'll test some other price point like the 36 high. Why the 36 high? Because it's still a trading range day, and this was still a tight channel down. So even though we get the reversal up, we're probably going to have to test back down to the 36 high at some point, so that the bears who sold above 36 and are scaling it higher are going to be able to make money. 39, a bull bar closing near its high. Good for the bulls. We're probably going at least a little bit higher, but I'm not sure how much higher without a pullback. I still think we're always in long, and this is overall bullish, but are we going to rally straight up without pulling back? Probably not. Outside down on 40, tests to the 36 high, finds buyers. Not all that surprising. You know that 37, 38, 39, big enough for a second leg up. 39, bad low, one short for the bears, so probably more buyers below during 40. 41, a bull bar closing, not all that near its high, but it's good enough bull bar that we're probably going at least a little bit higher. 42, it's a second reversal down, but it's more or less a doji bar at the moving average, so I still think the always in long premise is valid, and it's reasonable to be long, so probably more buyers than sellers below 42. And then you get an outside up bar 43. Weak bulls would exit below 42 and they get trapped out, and they have to chase the market up on 43. Okay, I think once you see 43 to pull a stop below bar 40. 44, consecutive bull bars, but big tail 43, 44, so not quite as good as it could be. However, we are still always in long, and we're probably still going at least a little bit higher. I think at least to the 7 low. 45, a good bull bar closing near its high. It's climactic and 3 pushes up. 1, pullback, 2, pullback, 3. There's one other really important thing. Kudos to you if you noticed it for that bar to 45 touched. One other reason why we sold off a little bit during 46. And that is if you bought above 37, what was a reasonable scalping profit target? Was 10 points. So 408. So 5418 is the high of the bar 37. So the market needs to go 10.5 points past that. So it needs to go to 5428.5. And look at the high of bar 45, 5428.5. And that's why there are sellers there, causing bar 46. An inside bar of bar 46, a high 1. Good for the bulls, not great for the bulls that it's a bear bar, but it is a high 1 in a bull trend. Follow through for the bulls 47, but again, we're getting relatively high up in the range here. It's okay to be buying, but I think that we're probably going to pull back pretty soon, exit below any bear bar if you're watching. Follow through 48, we touch the 7 low, which is good for the bulls, but probably a lot of, profit taking in this area. So some traders take profits. Then we get 49, a bear bar closing near its low. Bulls can exit below 49. We're probably going to get at least a second leg sideways to down. So it's hard to want to buy above 50 or 51, knowing that we have 3 pushes up to 48. And 49 is strong enough that it's probably going to get a second leg sideways to down. 50 is a high 2, but it's a doji bar. It's not really all that good. Again, expecting more sideways here. Even if we rally, we'll probably test back to around the 49 low. 51, a big bull bar, but a tail on the top, which is relatively disappointing. An inside bar, 52, it's a high 1, but a bear bar, I don't really want to buy. 53, it's a bull bar, but again, a tail. It's really rather disappointing. I'm more interested in waiting and seeing what happens at this point, seeing if we can end up getting to the targets, which I think, the open of the day is a reasonable target, and this low was a reasonable target as well. But I wasn't that convinced we were going to get all the way up there. 54, a bear bar closing near its low, disappointing. It's double top, 48. It is a wedge, but, second entry for the wedge from 49. But I don't really want to sell here. I still think overall we're a little bit more bullish. I'd rather wait for something more clear. I don't really want to sell against a channel this tight without the market going sideways for quite a few bars first, especially in this context. Because if you're selling here, you're still selling in the middle of the trading range. It's okay in trading ranges to trade against tight channels like this tight channel, betting on a trading range when you're buying pretty low in the trading range. If you're buying above 37, you're buying pretty low in the day's range. So you're buying well in the lower third of the day's range. It is a tight channel down, but it's better to trade against tight channels in trading ranges if you're buying in the lower piece. Here, if you're selling in the middle, basically the middle third, which is never really a great spot to trade, and you're trading against a tight channel. So that makes that a lot worse. 55, follow through for the Bears, but a tail on the bottom, not all that good. The Bears probably need more to make the market always in short. And we do have an open gap here, which is good for the Bulls, probably going at least a little bit higher. 56, a big bull bar closing near its high, but a tail on the top. It is breaking far above bar 48, or it is breaking out above bar 48, not far above, but it is above bar 48. 50 set, and it's a surprise, so you know we're going to get a second leg sideways to up. So good for the Bulls. We're probably going at least a little bit higher, but it could be more sideways to up rather than straight up with you know how sideways this day has been, and it's a big bar with big risk. Disappointment 57. I don't think you need to exit below 57 if you bought above 56. You wait and see what happens. 58, a doji bar, so disappointment for both sides, and then we trade above the doji bar on 59. So bears who sell below 57 disappointed in 58 and get stopped out 59. And if you sold above 55, that was a credible thing to do. But those traders are still trapped. So you can see those traders actually stayed trapped for the rest of the day, which is part of what added fuel to this rally. And the give up bar on like 67. 60, disappointment, doji bar. Again, I'm waiting, to me, I see a spike on 56, and now we're in the channel phase. So we got a channel, which was essentially a wedge channel, 57, 59, and 61. So it's a spike 56 in a wedge channel 59 or 57, 59, 61. We traded below the wedge channel 62, but buyers not too far below since bull bar. 63 breakout above wedge channel after spike in channel. So hoping for breakout above to new high, probably relatively 50-50, but 63 never triggers. Any bull who bought the close of 63 might be disappointed in 64 and could use 65 to exit their longs, but big tail 65. So disappointing for the bulls who bought. 66 follow through for the bulls and bears give up, causing 67, but 67 buy climax really high in a trading range, so better to wait. You could argue that bar one was the spike, and pretty much the whole move down was the channel. So we're trading back up to around the 2 high, this 3 high start of the channel. You can see that's exactly what happened, 68. And then you got disappointment there. 69, a big bear bar closing near its low. So big bar for the bears. Bulls are exiting. And then 70, a high 1, but I'm not buying a high 1 after how big 69 was. 71, a bear bar, but bears would argue maybe some sort of failed breakout above the channel and major trend, higher high major trend reversal from the channel, maybe lower high major trend reversal 71, but probably just a second leg sideways down, I think, is a far more credible argument. You have to keep in mind there's probably buyers below 70 if we get there. And 66, 60, or 65, 66, 67 is more dominant than 68 and 69. And the overall channel up is really tight and much stronger than the move down was. You can see 73, buyers below 70. Again, big bar 71 or 70, but it's a high 1, and high 1s generally lead to pullbacks and then trend resumption. So probably not smart to buy above 70 and put a stop directly below it. 74, a bull bar closing near its high. Can you be long? Yeah, you can buy above 74. It's a high 2. Hopefully trapping bears above 73, which it did. You can see if you sold above 73, those traders remain trapped the whole time. And follow through 75, 76, 77, traded below 76, but probably buyers below 76, bad low 1 short. And you can see we broke out above this high and basically within 1 tick of this low, which is what the bulls wanted, and then reverse down. For stop order trades, probably the first one that was really reasonable, maybe 3, but I think that's, I'm not doing that. 9 is maybe reasonable, but I don't really think it's all that good with the wedge. I think it's a really climactic bar. It's a shaved bar, a really climactic bar around yesterday's close, so I'm not doing that. 10 made a little more sense. 11 maybe, but big bar, big risk is a problem. I think 12 is a reasonable reversal. Maybe you could sell 18, 23, 24, 25 by the close. 30 made sense, I think. You could argue, some sort of wedge, but really tight channels usually get second legs down, so that we could be getting second leg down. Really, you could argue this whole thing, spike, pullback, channel down. It's sell the close, I guess, always in short, 35, 36, possible second leg trap. 37 is the best trade of the day. Just buy the close of it and put a stop below and sit on your hands. 39, follow through for the bulls, good for the bulls, just buy the close. Rally up, maybe 47, since always in long. and 56 made some sense, and then probably 74. I wouldn't really do anything else. So pretty interesting midday reversal. On the daily chart, you can see we ended up finding buyers below here, but again, I think sellers above today and not too far above. If we break out, I would not be surprised if we get back here before we get to 5,500. This gap looks exhaustive, and we got consecutive bear closes. And look at the weekly chart. Pretty climactic. Well, pretty climactic bar. I'm not sure how much higher we're going. We did not. Oh, let's see if we kept an open gap between this high. So 5,334.75 and the low of this is 5,334.5. Okay, so we traded one tick below this high, which means that the bears who shorted above this high, and let's say they scaled in at the new high, they were able to use the basically the opening dip of the week and get out of their trade. So us trading below there means limit order bears are probably making money, which makes this a little less bullish. So what are the bears going to try to do tomorrow? They're going to try and put as big of a tail as they possibly can on this week, since it's Friday, and turn this into some sort of disappointing and hesitation bar for the bulls. And the bulls obviously want to close as strong as possible. So the midpoint of the week, I'm not going to do it out exactly right now. I'm going to do it out tomorrow morning, but you can do it on your own time. Whatever the midpoint of the week is tomorrow, somewhere around here, 5,400, is probably going to be a pretty important magnet if we start to sell off. All right, that's today.